Utah has become one of the most attractive states to build a business. Strong job growth and low operating costs draw entrepreneurs looking to scale. Registering your business is a multi-tiered regulatory process that permanently dictates your taxes and personal liability. Your entire legal foundation rests on choosing between an LLC, a C-Corporation, or an S-Corporation. Here is a common misconception. An S-Corp is not a legal entity formed with Utah. It is a federal tax election made by an existing business. LLCs and C-Corporations are the actual legal structures registered with the Utah Division of Corporations. If you confuse a state formation with a federal tax status on day one, you risk double taxation, compliance failures, and a mountain of administrative paperwork down the road. The first actual step in the gauntlet is the name search. Utah requires a unique name that hasn't been claimed, and it must include specific identifiers like LLC or incorporated to avoid immediate rejection. If you plan to operate under a brand name that differs from your official legal filing, you have to submit an entirely separate Doing Business As, or DBA, registration. Next, you have to designate a registered agent. This is the official legal contact authorized to receive state correspondence and legal service of process on your behalf. The state enforces strict rules here. The agent must maintain a physical Utah street address and be available during standard business hours. P.O. boxes are invalid, and this address becomes part of the permanent public record. With those details locked, you submit your certificate of organization for an LLC or articles of incorporation for a C-Corp and pay the baseline $59 filing fee. C-Corps face an extra layer of complexity right here. The state requires you to explicitly define your corporate purpose and detail the exact number of authorized shares on the public document. Paying that $59 fee merely creates your legal shell. It doesn't give you the operational right to hire employees, process sales, or collect taxes. Immediately after the state approves your entity, you have to secure an Employer Identification Number, or EIN, directly from the IRS. You need this 9-digit number to open a business bank account or process payroll. Then you pivot back to state compliance by registering your business on the Utah Taxpayer Access Point, or TAP. This is where you set up accounts for sales tax and employee withholding. This exact transition from state to federal to local portals is where founders make administrative errors, especially with the Utah TC69 forms. This is the TC69C document. The top header text explicitly warns users, do not use this form to register a new business. Instead, these sections show it is strictly designed for amending existing operations or closing specific sales locations. Clearing these specific federal and state tax registrations is what finally allows you to swing the doors open. Mastering this multi-agency handoff, coordinating your state formation, federal EIN, and local tax accounts is what actually keeps your operation out of legal jeopardy.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first. And then, let's get into the step.
The legal structure you choose has to support the exact way you plan to grow and fund your company. If you are a solo founder or running a small team, your profile matches up directly with the LLC structure. It offers highly flexible internal management and straightforward check-the-box tax reporting, but you have zero ability to issue shares to outside investors. Startups looking to raise institutional capital from venture firms require the C-Corporation structure. This structure grants you the power to issue multiple classes of stock, but demands strict board governance and triggers double taxation. Eligible entities looking to optimize their tax burden can elect the S-Corporation status. This election lets you bypass double taxation and Utah's minimum franchise tax, but strictly caps your ownership pool at 100 shareholders and limits you to a single class of stock. Your operational model, who you plan to hire and how you intend to fundraise, has to dictate your entity choice, not the other way around. Every single legal structure requires specific trade-offs. The LLC offers a low $59 entry cost and the administrative simplicity of pass-through taxation, where business income is reported directly on your personal tax return. The catch is that by default, all of your active income is subjected to self-employment taxes. The C-Corporation provides the absolute strongest liability shield available, while giving you unlimited capacity to generate capital by selling equity. The penalty for that power is double taxation. Profits are taxed at the corporate level and again at the individual shareholder level, plus you owe a $100 Utah franchise minimum tax. The S-Corp election utilizes pass-through taxation to mitigate that burden, lowering your self-employment tax obligations. But to secure that status, you must file IRS Form 2553 within a rigid 75 days after your initial formation. Miss that window, and the tax benefits disappear. Every single entity provides a specific protective shield, but extracts a precise toll in taxes or administrative labor. Utah provides a streamlined path to market, but you have to know exactly what you're signing up for. The state's highly efficient, low-cost $59 entry point is an advantage, but the specific legal entity you choose on day one sets your operational ceiling for years. Choose the LLC if your primary goal is administrative ease and highly flexible management. Choose the C-Corporation if securing institutional capital and issuing multiple stock classes are non-negotiable requirements for your growth. Choose the S-Corporation election to dodge double taxation and state franchise minimums, but only if you can survive the strict ownership caps. Remember the golden rule of Utah business registration. The state filing is only step one. Federal EINs and local tax compliance must immediately follow. Evaluate your capital needs and your tax tolerance before you ever log in to the Utah Division of Corporations portal. A correct structural foundation protects your personal assets and provides the exact legal framework required to scale.